anyone that's looking to become a trader, I'm going to show you a trade today and a couple of other little things, which is going to help you propel your career in the right direction. And I'm going to show you just how simple this whole process can be if you apply a few certain things to the market, such as time and price, such as weighting, and such as a few different confirmations, which I'm going to go over. Now, what can we see here? Okay, we can see that this is EURUSD. We can see EURUSD is dumping to the downside. Now, with that being said, when we look at the DXY, that's the US dollar index, you can see it's pushing to the upside. So for anyone that doesn't know, if the dollar is pumping higher, you would be looking for inverted price action on the other correlated pairs. So if the dollar is pumping higher like that, you would be looking for price on EURUSD to essentially come lower. And that is essentially what we're looking for here. So in EURUSD, at the start of the week, this is a daily time frame. At the start of the week, it was Monday, and we were creating an area of inefficient price action. So if I actually just replay this whole thing, when I did my weekly outlook, I wanted price to finish whereabouts it was and create this area of sell side imbalance. Now, the reason I want price to create this sell side imbalance is to give me a key point of interest area for price to essentially travel back into and then continue giving me sells. I can't just blindly sell in the market. Even though I'm bearish right here, I'm not able to just blindly sell here. I need price to retrace higher. And because we expanded so far down, we also have this huge area of imbalance, but we're very, very bearish. And I'm trying to go with the momentum of price moving lower. So what I'm actually looking for is for price to create this imbalance, which it did, come into this area, preferably the middle of the week, maybe Thursday, which is today, and create a high of the week, and then look to take price lower, potentially targeting liquidity that it creates lower. So once that essentially happened, you can see here, okay, price did this on Monday. Tuesday, it was just a bit of a nothing day. Wednesday, we had a lot of volatility in the market, pushing up here. And then today, if we zoom a little bit closer in, you can see price pushed into this imbalance, swept above yesterday's high, and then is now dumping to the downside. I was able to find a really nice trade opportunity in here, and I'm going to break down exactly what happened. But you also have to remember, I'm not doing any trading on Monday, Tuesday, or Wednesday. No opportunities were happening. It was all about understanding and waiting for this particular event to happen. When I go over to US, to the Forex factory, what you can see here, Monday we had USD news, but we knew we were looking to create that imbalance. We had news on Tuesday, quite late in the day. We didn't have any USD news yesterday. But today, 1:30 UK time, USD news. So that is significant because everything, like I said, is time and price. We want price to be in an area which can offer volatility into the market. If price can offer volatility into the market, when it's inside a key point of interest area, you can be a part of some of these awesome moves. So if we move a little bit lower, you can see price actions obviously reacting from this area here. Okay, you can see now if we highlight a few different things, I'm just going to use this particular line right here. Now, if I zoom in a little bit, that there is essentially midnight New York. So basically what I'm looking for in here is to basically see what is going to happen after this, because this is essentially when the algorithm is resetting. Okay, it's when the algorithm is resetting. So what we want to try and achieve is a trade opportunity, okay? Because when a new candle opens just like this, you will be able to see what happened. Price opens here, the algorithm resets here, price pushes higher, and then is now dumping to the downside. So you can see here the wick, if you looked at this from a daily point of view, it will look something like that at the moment. What we want to be involved in the markets somewhere around this area here. We do not want to be selling now because price is heavily dumping to the downside. So we don't want to be involved. I was looking to wait for this particular news event, 1:30 UK time, because that is when we have relevant news. So the London session, even though it did provide an opportunity, because price pushes higher, expands to the upside, creates this sell side imbalance right here, even though it hasn't broken structure. If you go down to a smaller time frame, you can see price creates another sell side imbalance right there. Now, there are certain things I would explain to you, but I don't have time in this video, about why this price action finished where it did, why the range came up to this area and then created sell opportunities above the opening price. You'd be using something called the range, the data ranges. So IPTA and things like that, the central bank dealers range. But I'm not going to talk about that today. I'm going to talk about this particular trade opportunity. But this was very, very clean. So what we saw is that essentially when price came into that area of imbalance, it carried on moving to the downside. Once price moves to the downside, we then have to think about time and price. Okay, we're coming up to 1:30 and we can see price is pushing back to the upside. So on a smaller time frame, or even on a 15-minute time frame, because essentially we've decided we want price to carry on moving lower, we're inside a key level, which is this daily time frame imbalance, excuse me. Okay, so on a smaller time frame now, what we're looking to try and achieve is how and where can we be a part of this particular marketplace? What are we looking to achieve? And is there anything else that is going to support us moving lower? We've come above the opening price. London session has done its job. That is called the Judas swing, or essentially like the fake out. It's giving us that manipulation move higher. Great, that's fine. We like that. Okay, price is now breaking lower, giving us this really interesting candle right here. Okay, price retraces lower, creates a sell side imbalance. Price disrespects it, carries on moving higher. Now, 1 o'clock UK time, price sweeps above that liquidity right there. Very interesting stuff. What is happening in the New York session? It's looking for an area of liquidity to seek. Okay, we're looking to target liquidity, and we need to manipulate by taking liquidity to the upside before we take price to the downside. Very simple stuff so far. Hopefully you guys are with me. How can we be a part of this particular move? If you go down to a smaller time frame, you can see price pushing higher there. When we get into the news, this candle here, the big candle to the downside, was the news candle. That's the volatility in the marketplace. Look at what price did. It came into this area of sell side imbalance, buy side inefficiency. And if I turn on the middle line, you will see it came literally to 50% of that line. The perfect entry for Euro. There's a couple of other things I'm going to show you about how and why this played out in a particular manner in just a second. But there's another reason as well I like this area, is because we created this imbalance as well, or this inverse, if you like. And that is a balanced price range. This particular wick, which was the news candle, came into this area of imbalance as well as this one, and then dumps to the downside. And I'm utilizing all of that from, we've opened, we've pushed higher, manipulated, created multiple sell opportunities right here. And then a new session happens, we push higher, sweep liquidity, and start dumping again. If the London session is inside a key level, which you can see clearly here it is, the expectation of the New York session is that it is going to retrace somewhere into whatever the London session has created, which in this instance was this order block right here. In doing so, it swept this high. That's another tick. And then price dumps to the downside, targeting these equal lows right here. You only need to be a player up to these equal lows. That is liquidity in the market. You'll hear retail traders say, oh, they're levels, that's where we get in, whatever. They're talking crap. This is liquidity in the market. This is where orders are being placed. To us, that's liquidity. That's what we're interested in. And we can see here, price retraces, comes back down. How am I getting into the market? I'm utilizing this area right here. So another few different things you can do to give this particular area confluence is to pay attention to this particular high that was swept by this liquidity. Because as I mentioned in the video before, you need the dollar to correlate with euro, but you also need to go one step further here. Because if you are able to identify the correlation between Euro USD, Pound USD, and the US dollar, you will be able to find really high probable chances for reversals in the market or great trade opportunities in the market. As mentioned before, and I'm focusing on the bodies, not necessarily the wicks. You can use the wicks and the bodies. It is a bit subjective, but I'm using the bodies in this example. This high, which was created at 12:05 UK time today, is right here. As you can see, price comes lower and perforates through that high. That was our liquidity sweep. If you look, even if you look at the wick, this same high right here, the dollar did not perforate that area. And if you look at the bodies, even though the wicks came lower, the bodies did not close below the body of this low. Like I said, you want the dollar to drop and go higher, and invertedly, you want euro to push and go lower. That there, when I saw this happen, as well as this sell side imbalance being created, that is a golden opportunity for you to take a sell, knowing there's going to be volatility in the market at this particular time. Okay. Now, look at this from the pound as well. Because the same high, again, you can use the wicks, compared to this high here. So this is the same high as this one on pound. We haven't even come close. So pound and dollar are not willing to do the same as what euro is doing. There's a cracking correlation. Therefore, supporting the idea of lower price action. Therefore, supporting the idea of price reacting from a higher time frame point of interest on euro. This is the sort of stuff I look for in the market every single day. And I'm not trying to overcomplicate anything right here. I'm trying to make you understand that when you simplify these concepts to what I'm trying to show you here, this is what I'm teaching my students at the moment. I'm trying to teach my students throughout the year at the moment. You're not going to get a trade every day. Monday, Tuesday, Wednesday, and today. Today was the trade. So it's about being patient throughout the week. But when you are patient, you can get the best trade opportunities. Okay? You can get some of the best trade opportunities, and you can have full trust and transparency in the market, knowing that price should go in your favor. Now, obviously, you don't win every single trade. We're not here to try and win every single trade. We know that. We understand that. But if you use good risk management and you're utilizing high quality setups such as this one here, you will be able to understand the market so much clearer. But we can go even deeper than this. Okay, we can go even deeper than this. If we look at price action from a higher time frame, 4-hour time frame, we can see this area here is your imbalance. Look at the high that was created on Monday on euro, right there. You can see price came above it. The same high on pound. Price is not sweeping above. There is an unwillingness for this price action to do exactly what euro is doing as well. You can see that dollar and the euro did, that's the wrong one. You can see that the dollar and euro did correlate nicely for that. but the pound didn't. The pound is showing an unwillingness to go higher. It wants to go lower. There are strong signs of price continuing lower. That's divergence in the market. This is it's kind of like an introduction to divergence in the market for you if you don't know what it is already. But having that divergence in the market here, as well as on the smaller time frame you're trading, giving you that confirmation after being inside a higher time frame point of interest, as well as receiving the imbalance to actually sell from, that is your setup. That has to be your golden setup going forward. That is what you have to look for in the market. If you look for that, I'm convinced you'll make a successful career of it. In my opinion, you need to watch this video as many times as you need to let these setups sink in. And actually, if you start learning about divergence and you start learning about all these different ways, these different methods with the imbalance, with the higher time frame key levels, you can start doing this on loads of different things. Not just euro. You can do it on the indices. You can do it on the metals. You can do it on crypto. Anyone here that's looking to invest in crypto right now, understand one thing. This is Bitcoin. This is Ethereum. And I'm not an investor in crypto. But is it not strange that the all-time high, previous all-time high from November the 1st, 2021 was perforated on March 2024. Why was Ethereum's all-time high not perforated through? And why are we suddenly now rejecting to the downside? So for anyone that ever asks, can these methods be working in the same in crypto as well? Yes, they can. So no, there's no way I'd be buying in crypto when I'm looking at this. I'm only interested in what I know. And I'm only interested in the highest quality setups. Hopefully you guys have found this insightful. Hopefully you can see and trust that with the right practice, with the right discipline, with the right work, you can make a really good career out of this. And understand that when you wait for high quality setups, you really can change your life with this high value skill. And once you learn this skill, there is nothing that is going to take it away from you. You will be unstoppable in the trading world. You're going to use risk management. You're going to utilize your skill, which is your edge in the market. Yes, you're going to lose some trades, but you're going to win more than you lose. And you're going to be able to profit from this. So guys, like I said, watch this video as many times as you need to. Practice it, take notes, go over it again and again and again, and do yourself a favor, backtest this now. Have a look. Have a look at previous highs, previous lows. Have a look at what happens to price action when we come into these key levels of interest on higher time frames. Don't just try and scalp on smaller time frames. I've shown you a 5-minute entry based on an area of reaction from a daily time frame, and we waited till today, which is Thursday, until that opportunity arrived. With that, guys, I'll let you get on with your day, evening, wherever you are in the world, and I will speak to you all very, very soon.